over the next 3 to 4 years, I think DMart definitely should record decent growth. Obviously, the stock is not cheap by any standards, but if the time frame is at least 3 to 4 years, then I think definitely this is one retail story which is yet to get completely panned out in terms of the earnings growth, in terms of the opportunity for growth in India. Retail is a very big space. In fact, more than 50,000 crores of business gets added every year to the retail basket. So obviously, with a 3 to 4 year view, I think any dip in the price or any negative sentiment, whenever the stock corrects, it could be a good time to accumulate.
This next query that I have is coming in from a long-term investor. Sudesh is the long-term investor. He's writing to us from Kerala, and he is asking for a 2 to 3 large, mid or small cap names for his core portfolio. And he's asking, in a large cap, is it better to add Infi, TCS or HCL Tech, or all of them, or just one of them? He's asking this for Kunal, but considering he's a long-term investor, Avinash, I will throw this question to you.
Yeah, I think from a long-term perspective, IT definitely has the potential to bounce back, and I think currently almost all the IT names like TCS, Infosys, HCL Tech are available at attractive valuations. But I think one needs to keep in mind that Europe is in the midst of a recession. US markets are also going through technically factual kind of a recession number, and I think this is definitely going to result in at least slower growth for the next 2 to 3 quarters. So margins could come under pressure. So if the investor has a 2 to 3 year view, I think he could use the weakness to actually buy and sit on these stocks with a slightly longer term time frame. So in that ranking, I would suggest TCS seems to be very attractive. They made a buyback at almost 4,500 plus rupees, and I think the company continues to be cash rich, has a very good order book. So TCS definitely could be a good bet, but again from a longer term horizon. I think he should continue to hold on. I think the company has delivered very strong numbers in quarter 1 of FY23, and see, this is a B2C business with very high margins, and the company enjoys a very strong brand franchise across pan India. So my sense is, I think if he can hold on for the next 6 to 12 months, he could definitely expect a decent upside even from the current levels. So he should not sell out in a hurry. It's a great, well-managed kind of company, and with the normalcy kicking in, COVID going away, I think we could see a lot of upside for these kind of retail footwear companies. Yeah, I think my sense is the stock is pretty illiquid, and most importantly, I think it still needs to get a decent amount of scalability on its business side. Only if the investor has a 1.5 to 2 year view, I think he should hold on. Otherwise, in the very near term, I don't think there is going to be any major upside here. So it's better to take a 1 to 2 year view here. In the short term, the stock may not give you a very decent kind of upside. So please keep that in mind. I think better to wait for a correction clearly, because the stock is not cheap, and I think looking at the kind of earnings growth trajectory over the next say 1 to 2 years, a small dip is definitely advisable. Definitely long-term prospects are good, and I would not be surprised that in the longer term, value could also be made from these levels. But I think a mild correction could definitely provide a better risk reward. So I think wait for a mild correction and then start accumulating. See, I think LIC has disappointed a lot of investors after its IPO, but one thing is very clear, that they are in a business which is profit making. They control about 60 to 65% of the insurance market share, and I think what the market has not liked is that previous year, the dividend was also not very great, and secondly, somewhere the management has not been very aggressive, unlike the private insurance players. So my sense is, I think if the investor has a 2 year view, only then he should hold on. If he has a shorter term view, then I don't think there's going to be any major upside in the very near term. But yes, longer term, definitely the stock should do well, considering that India is a very low penetrated country as far as insurance is concerned. So longer term, I think he could definitely make a lot of money. But in the short term, I think it's avoidable. No, I think my sense is that within the power utility space, NTPC definitely looks attractive, and I think within the stocks mentioned by you, Sigachi definitely also looks to be a good mid-cap kind of company. Sigachi, by the way, makes microcrystal and crystallates, which are basically major inputs in the pharmaceutical sector. They have a very rich clientele, so growth will definitely come in. Already the first quarter numbers have been encouraging, and the management commentary has also been good. So here I think if the investor can hold on for at least least a year, he could definitely expect a decent risk reward. And within the large caps, I think we still continue to be positive on NTPC. Our sense is that with a large power generating capacity, NTPC could definitely be a very good outliner in the power generating space. So these stocks, I think they could consider for long-term investment. Cheryl, I think CDSL definitely stands out considering the fact that it's one of the players which is the player in the depository kind of business. It's a platform-based company, and recently I think news flow has also come in that from December all the existing policy holders will have to do eKYC via CDSL. So that's going to be a big leg up for CDSL. So my sense is, in fact, if he wants to invest in CDSL, that could give him a better leg up as compared to Angel One. Of course, Angel One is also doing pretty well. They are a technology savvy broker, and I think the ramp up in their business volumes is also quite commendable. But I think if one were to make a choice, I think CDSL would stand out better, as I believe that over the next, say, one and a half year, you could see a significant amount of incremental growth coming in for CDSL via the insurance eKYC business. I think, as far as LTTS is concerned, I think the stock definitely looks attractive from the next 2 to 3 year view, and I think their business model is completely different from Infosys. They not only have a very strong inclusion of artificial intelligence, machine learning, but they obviously cater to a lot of general engineering sectors also. So I think LTTS definitely can be looked upon. It's corrected significantly from its 52-week high. So I think if the investor has a 2-year view, then definitely LTTS could be a better opportunity. Globally, stocks we don't cover, so Cheryl, I won't be able to give you a comment on Apple.
Okay.
Sale can definitely be averaged at the current level, but clearly in this company, the bigger event is going to come in from Europe. Recent reports suggest that a lot of steel and metal companies are going to stop production because energy costs have increased significantly. So that could present a very large opportunity for an integrated player like SAIL. So my sense is keep a time frame of at least next 6 to 12 months and average the price, because the acquisition price has been slightly on the higher side for the investor. So keep a time frame of 6 to 12 months and definitely remain invested here. No, I think the auto basket is going to do much better than the IT sector, and I think this is because this sector has come out of a very long, difficult period over the last, say, 2 to 3 years. So I think companies which are operating in the commercial vehicle, in the passenger car space, the auto component companies, I would not be surprised, Cheryl, that these companies could actually deliver significant returns over the next 1 to 2 years. So I think IT may not be in the same horizon what it was about 2 to 3 years back, and I think the time to buy IT stocks is still some time away. There's no need to hurry to buy IT companies, whether from the mid cap or the large cap basket. I would still continue to believe that the auto and the auto component basket would do better. So, if he has a holding about 2 to 3 years back in auto and auto components, it's better to hold on. There's no need to hurry to book out, profits here. Yeah, I think Bank can definitely be looked upon as a good fintech kind of player in the in the financial services space. More importantly, they have a large pocket of opportunity in the rural markets, in the tier 2, tier 3 kind of cities. So typically, if the investor has at least a year or year and a half kind of time frame, then I think payment banks can definitely do well, because the payment space is a very big opportunity, and I think Payments Bank has got its infrastructure well in place. Most importantly, its profitability levels are quite significant compared to the other fintech players. So longer term, definitely one could expect a decent risk reward, but yes, in the short term, in the next 2 to 3 months, please don't expect any major upside. There's no near term trigger, at least as of now, visible.
Okay. Kunal, the next query we have is coming in on BPCL Holdings and BPCL, and Nelson is holding BPCL 1000 shares at 334 rupees. Should they sell or add more? What is the view on this one?
See, if it's a very short term kind of a time frame which you're looking out for, then I think closer to 340 odd level is where you can look to book out profits. My sense is that the stock has this odd tendency of going into very minor rally 3-4 days and then getting into a correction or a time wise consolidation. So these are the kind of stocks which you should probably look out for only from a short term trading play, and don't look to hold it from a medium to long term play.
Alright, with that, let's kickstart with the rapid fire then, and the first one is coming your way, Kunal. Sudhakar from Hyderabad, Solara Active Pharma, 32 shares, 1,560. What should he do? Average buy or sell?
I would suggest to average at current levels of 450.
Avinash, next query is on ITC. Madhuri wants to know whether they can buy ITC at current levels for the next 2-3 years.
Yeah, definitely. One should definitely accumulate ITC at the current.
Okay, Rajan from Chennai wants to know about Excite 800 shares purchased at 172. Should he hold or sell, Kunal?
I think you should definitely look to hold, and if possible, add if the stock corrects to 160.
Anand wants to know Coal India, whether